But let's bring in BD8 Capital Partners CEO Barbara Doran and Jefferies chief market strategist and CNBC contributor David Zervos, also CNBC's senior economics reporter Steve Leisman. As we do wrap up this Fed day, Steve, I'm going to go to you. You're in the room. There were a lot of expected moves and comments by Powell, specifically the fact that rates were kept unchanged. Talked about uncertainty. Looks like the economic projections were weakened here. Inflation possibilities strengthened. To me, one of the biggest takeaways was the fact that QT is going to get less tight here in the next couple weeks.
I think that's a factor here, Morgan, but I'm going to give you my movie review here rather than the technical analysis of the Fed. I personally think the Fed is in a very difficult position here, and I think Powell made it clear how uncertain it is, but I thought Powell was very confident in his options and what he can do. He doesn't seem to be panicking here. And I thought in terms of how the market reacted, I thought his demeanor was a big part of that. He was not fumbling for answers. He really seemed to have thought all this through. I asked him the question about really the stagflation idea, which is if you're in this situation of higher inflation and lower growth, what do you do? He seems to really have thought that through. And there isn't much the Fed can be doing here. The Fed is very uncertain about the outlook. So, and you could see that in all of the projections. So I think right now everybody's in a holding pattern. I wouldn't be betting the farm on any outcomes here. But in any event, I think that the Fed feels pretty confident about where it is in its ability to deal with situations that are very unclear.
David, one of the things that stood out to me was Powell's comments on the fact that it appears that consumer spending is slowing, because you juxtapose that to Brian Moynihan of Bank of America, who was on CNBC earlier today. And here's what Moynihan had to say. Have a listen.
Our Bank of America consumers are putting 6% more money, into the economy than they did for the first 2.5 months of last year, and that's a pickup from the fourth quarter last year, which ran 4.5%. So that money is going to different places, and you've referenced some clients who might be seeing different things, but a lot on services, a lot in entertainment, but the spending levels continue to go up.
Your takeaway, David, on what we heard from Powell and what we've seen in the macro data thus far, which admittedly has been more of the softer data where we've seen weakening, and what we just heard from Brian Moynihan earlier today, which I would imagine is tied to more high-frequency data, given the fact that the bank has its hands on so many different aspects of money as it's moving through the system here.
Well, Morgan, I think it actually, there's a sort of broader issue here, and I think Jay really highlighted it when he was asked about the confidence surveys and some of the weakness that we've seen in those confidence surveys. He said, look, these surveys have really not been helpful for over a couple years now. They were very negative, but people still went. I think he said people were negative in their survey, and they still went out and bought a car. So I think he's really downplaying the importance of survey data and highlighting more the market-based data, like what he did with inflation expectations. And I think when he gets asked about the consumer sentiment or business sentiment surveys that seem to show some cracking and weakness, he's not taking that nearly as seriously as he might have before, because they really misguided the street and all of their calls for recessions 2 or 2.5 years ago. So I thought that was the interesting part of how Jay responded to those consumer sentiment indicators. And what you're seeing from Moynihan is not inconsistent with kind of what Jay said about the real data, which is the economy sits in an okay place. We've got a low unemployment rate. We've had inflation that's come down. It's a little sticky above target. But yes, there's some signs that things could get bumpy, but there's always signs things could get bumpy. There's, as I think Jay said it, there's always sort of a 20% probability or so that we're going to go into recession for whatever reason. So you always want to be nervous about it, but he has the tools, as Steve said, to fight it. He feels very confident. I think the market liked hearing that kind of Fed put style language and went up. And I think the QT, as you opened up your statement with, had a lot to do with the immediate market reaction today.
Barbara Doran, want to get your thoughts on this, especially given the fact that major averages were higher today, but definitely moved to another level during that Powell presser. And yes, we gave back a little bit of the gains here into the close, but as I mentioned before, the S&P is still up more than 1%, the NASDAQ up 1.4%. Did those moves, did that market reaction surprise you?
Not given what Powell said, because what I found most interesting, I mean, Steve is right about he kept saying it's uncertain, and certainly about the sentiment indicators, David is right there. And I think Powell is at pains to say those are short-term indicators. We have not seen long-term inflation expectations, for instance. So the consumer and business surveys may reflect the emotion of the moment and all the headlines. But what was interesting is that even though they raised the unemployment rate prediction for this year, they raised inflation, they cut GDP growth, they still are talking about 2 cuts. So to me, that says they're not certain, but it looks like this is a lot of short-term noise, because given the underlying fundamentals that we've all talked about and seeing what's happening with jobs and consumer balance sheets, it seems like this could be a stutter step as people wait to get certainty on the tariffs. And certainly at this point, the market seems to me very oversold. It has swiftly discounted worst-case scenarios. So I think there's some interesting picks in here.